Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? So in today's episode, I am joined by a special friend, a special guest, Mr. Fred Moskowitz. He's really the expert when it comes to note investing. I've really been sitting down with myself, and for 2025, I really want to diversify a lot of my investments that I have right now. And I kind of want to get into different asset classes, and notes is something that really intrigues me. It's also kind of in line with the private lending that I do right now. So I'm kind of taking baby steps, getting out of my comfort zones. But this is something that I just want y'all to know about, different alternative investing that you could get into using your policies, using some qualified money that you have. This is a great place to build and create wealth for the family. So there's other people too that you should go and research as well. Mr. Kevin Shortell, he has a book out. It's called Real Estate Without Renters. He's a big notes expert, been in the industry, I think going on like 40 something years. Don't quote me on that, but it's been a long, long time. And also noteworthy, Mr. Ben Fredericks. Actually, he's a fellow Floridian, just lived right here in my town in Florida. But he has the annual Noteworthy convention that happens every single year. We'll be back. I believe it's in February, Anaheim, California. We're coming out to you again. So we'll be out there. I'm so excited to see all of my good friends that I met along the way speaking and teaching at Noteworthy. But this is something that y'all should really just investigate into. If you want to learn more, reach out to Fred, reach out to myself. I can turn you on to some context. But this is just something that I've been finding some interest in. It's been working out for people, and this is kind of one of the roads that I'm going to be going down in 2025. So thank you for joining me for another episode. Reminder as well, coming up next year, it's just right around the corner, Tampa, Florida, March 1st and 2nd. Join myself, my good friend Larry Steinhaus. We will be hosting Money Game Live. So everything that you need to know about mastering the money game. So 2 days in depth training there. I have some guest speakers coming out too, some industry leaders. And also the Money Multiplier Live Mastermind is coming back in 2025. And we have a location, Denver, Colorado. So October 2025, we'll be doing another live mastermind event just for all of our people. So it's really just a client event based where we get deep into the utilizations of the policies. So save the dates. We will be back making some more announcements as time goes on. But with all that being said, without further ado, let's dive into this episode. As an experienced investment fund manager specializing in mortgage notes investing, I have Fred Moskowitz here today, and I just want him to share his unique story and his passion for educating others and achieving financial freedom. You know, he actually left his engineering career to embrace a life of investing and teaching others about wealth building. And really his area of expertise that I want to talk about on today's episode is I want to explore the mortgage notes realm. What are mortgage notes? How do we find them? When do we buy them? When should we be selling them? So we're going to be getting into it in today's episode here today. So welcome, Mr. Fred. It's a pleasure to have you.
Thank you, Hannah. Thank you so much. It's great to be here today.
And for my friends too, up in the Northeast area. So Fred is just right there in Philadelphia. Fred, are you doing, live events or virtual webinars for the folks?
Yes, I am on an ongoing basis. I love doing speaking events, conferences, and webinars. I hold my own webinars periodically and trainings. And I find it's a great way to give back and add value to others in the investment community.
I agree. I agree. And you do, especially in this alternate investing world, you kind of have to have that sense of community and the ongoing education.
You
But
do, for sure.
but specifically, I want to ask you too. I mean, what really led you to that transitioning of leaving your W-2 to going into this full time?
Yeah, it's been quite an interesting journey, Hannah. As you mentioned earlier, yes, I uh, had a very long, successful career working as a computer engineer. And specifically, I was working in the tech industry. And it was during this really exciting time during the dot-com boom. And what happened was that it was a wild roller coaster ride. I spent a lot of years working at tech companies, startup companies, and we went through the dot-com boom, but then that was immediately followed by the bursting of the dot-com bubble.
Mhm.
And we had the September 11th terrorist attacks. It threw the world into turmoil, a state of turmoil and economic downturn. And so through all of that, it made me realize that I was taking this huge risk by relying on my paycheck as my only source of income,
Yeah.
right? Have you ever thought about that? How risky is your paycheck? And someone may say, what do you mean? Paycheck's not risky. I have a safe, secure job. Well, I found out the hard way that no matter how good of an engineer I was or how talented I my performance was, it didn't matter because if things weren't going well at the company or if the company went over under, I would lose my job through no fault of my own.
Yeah.
And so this is what got me uh, on the journey to developing other sources of income.
Mhm.
And I turn to alternative investments, right? Because what is the premise of alternative investments? It's all about buying and building assets that you own and you control, and they generate income for you all along the way. And so that cash flow is what I was seeking.
Yeah, yeah. I even say I've heard this one time too, is that they said salary is the most addicted form of drug or something along those lines, right? Because then once it's gone, it's gone. And a lot of people did see that during that time of the 2008 time, even during the
Yeah.
COVID pandemic, people were seeing, oh my goodness, I'm not prepped for these times that were unseen. And I'm relying on my time to create a paycheck so that I can put food on my table and a house over my head. And a
Yeah.
lot of people are starting to wake up, and a lot of people are now turning towards, the investment communities, whether it be YouTube University and other folks, and asking those questions to create more of the cash flow that comes in.
Yeah, that this is so true. Granted, there's nothing wrong with earning earned income, right, from a job. If you have a good profession, you love what you do, great. However, don't let that be the only source of income you have. And that's really the message that I teach. It's expand that, add to it, diversify. The same way we diversify our investments, we also should be looking to diversify our income sources as well.
Yes. Well, then talk to me about this, Fred. So, what exactly is mortgage notes investing, and how kind of does it differ from the other real estate investments?
Yeah, this is a great question. So I speak with a lot of investors, and a lot of people are interested in real estate, investing in real estate. And when it comes to investing in real estate, you have all of these different asset classes. You have single family homes, you have multifamily, you have commercial properties, even short term rentals, which is really popular now. All these different types of real estate investment. However, what if instead of buying the property, what if we talk about investing in the paper, which is all the mortgages, the debt that was used to acquire those properties? And what I find is that most investors, when they think of a note and a mortgage, they only think about it from the perspective of being the borrower and not as being the lender. And so it's a little known strategy that an investor can purchase a loan, purchase that note and mortgage, and step into the shoes of the bank. And when you do that, you transition from being the one making the monthly payments to being the one receiving the monthly payments. And this is how you can really create stability in your cash flow by doing this. And that's what it's all, this is what note investing is all about.
Yeah, yeah. And too, because it falls perfectly in line with how we have to change our thinking, specifically when it comes to the infinite banking concept too. Because when we as people, we think of a loan, we think of it as a debt, a payment, an expense. But loans to banks are assets. And
Yeah.
that's the number one thing that we always got to keep working on is that mindset shift. And I believe the ultimate in real estate is being the bank. And that's why I love doing all the private lending that I do. But here in 2025, just for my listeners, I'm really wanting to shift and get into different alternative investments as well. And one of the things I've been really looking at is the notes world. And that's why I wanted Fred to come on and kind of share too his experiences with the notes, where to find them, etc. But I agree, because you being the bank, you holding that note, now you're the one collecting all the payments. And in my opinion, it is a true form of passive income. Some folks who are out there getting into real estate, owning the long-term, short-term rentals, there's some labor associated with it. I want as minimum labor as possible, and I just want my little green men out there working for me.
Yeah, that's so true. Real owning rental real estate is a great activity. It's powerful. It's a great way to build wealth, but it's not for everyone,
Mhm.
right? It's for some people, either they don't have the time or they don't want to deal with the headaches and the work. There's a lot of work involved, granted. So, note investing is a way for someone that maybe doesn't have a lot of time to invest into real estate without having to manage properties, having to deal with tenants or repairs or any of that, because the lender collects the payments and they sit there not as the property owner, but they are a secured lien holder on title instead. And like you mentioned earlier, when it comes to the balance sheet, assets and liabilities, for the borrower, a loan, a mortgage is an obligation and it's a liability to them. However, that same mortgage, from the bank's perspective, from the lender's perspective, that's an asset on sitting on their balance sheet. It has value, it generates income, and it's a powerful asset. And so this goes right along with my message. Always seek to buy and build assets
Yeah.
as an investor.
Hey, money multipliers! I just want to stop by and announce our live events coming up in Tampa, Florida, March 1st and 2nd, 2025. So myself and Larry Steinhaus, we're going to be co-hosting this event together. He's the author of Money Hacks and runs investor schooling up in Philadelphia, Pennsylvania. So we got a lot of the elite people in their expert field coming out and just sharing the knowledge on alternative investing, getting out of the markets. How can I go and make my money work even harder for me instead of me going out there and working for it? I can now take my time freedom back. So go to moneygamelive.com and you can go and snag your tickets there. I'm so excited. I'll see y'all here soon. Catch you then. And so like for people, this is like the first time they're ever getting introduced to notes, how
Yeah.
do I start as a beginner? Do I need any prior investing experience?
Yeah, there are a couple ways to get started with note investing, but like any other type of investing, start with education first, right? There's plenty of workshops and courses, books, podcasts you can listen to. This is one of the reasons why I wrote I wrote my book on note investing is really to give an entry level overview to investors about this business. And so always start with education. Then from there, there's two ways to get started. You can be an active investor and you are building up a portfolio, going out buying individual notes and assembling a portfolio. But you can also be a passive investor by investing in a note fund. Because for some folks, again, they may say, hey, I like notes. It seems like a really great asset class, but it's complicated. There's a lot of moving parts. I don't have time because I'm busy focused on my career or my business, and that's fine. And so an investor like that can invest into a note fund where the fund managers go out, they raise capital from investors, and then the investors have an opportunity to leverage the expertise, the experience, the relationships, the access to buy notes that the fund managers have, and they're earning that passive rate of return. And so it really is a hands-off investment for the right person. And there's no right or wrong answer with this. It's a very personal decision, and I always ask, how much time do you have? How much time do you want to dedicate to this activity? And then from there, you can make the appropriate decision whether you want to be a passive investor or an active investor. And these are conversations I have every day with folks that are interested in getting into note investing.
Now, Fred, what's the title of your book?
My book is called The Little Green Book of Note Investing. And thank you for asking, by the way. Yeah, it's available on Amazon. It's called The Little Green Book of Note Investing. We talk all about the overview of the business, how to find notes, how to analyze them, and perform due diligence, how to invest in notes if you're using a retirement account, which is a real powerful strategy, and how to invest in notes if you're using the cash value of your life insurance, right? With the infinite banking concept. We talk about that as well because it's a powerful strategy and a great source of capital for purchasing notes.
Yeah, yeah. And I think if you do want to get more on that active side, I would definitely go and research the book, get into the communities with Fred. And, there's other folks out there too. Actually, we haven't even announced this yet, but in February, coming up 2025, we'll be at Noteworthy live event in Anaheim, California. And I know a lot of you folks know Aaron Halderman, Ben Fredericks, and the Noteworthy community. And that's a great place to also keep learning. But Fred, I want to ask you, if I want to be the type of person that wants to be more passive into this, and I do
Mhm.
something like the fund, my number one question where I'm always thinking about when I put my dollars into something is, well, okay, if this thing goes belly up or something happens, what is my collateral there? And so if I were to ask you, if I put dollars into this fund, what is that collateral that can be protected or backed up by it?
Yeah, every fund is structured a little differently, so you do need to evaluate this on a case by case basis. So I'll speak in general terms. Note funds own the notes. They are the secured lender on title. And so um, that is always what's backing the assets backing the investment. And so no matter what happens, if there's delays in payments or default on a note, no matter what happens, the fund is always the secured lender on title. And what that means is a property can never be conveyed, sold, or refinanced without addressing that lien. And so
Okay.
that really puts the investors in a secured position, and it really helps to minimize the downside.
Yeah, yeah. And too, I've even like heard stories. Like I have some good friends that they love the notes world. And one thing that I just really enjoy about it is you are helping people too, because let's be real, banks don't care about us. This is a business to them. They just want to be able to collect their payments. And there was one story where a mother, her husband passed, so she's newly widowed, and she has two daughters. And it was hard. There was a loss of income there because the husband was the primary breadwinner of the family. And no, they didn't have life insurance. They didn't plan for this because we don't talk about the unexpected times that
Mhm.
could happen. But the bank, right? The bank was hounding on them. Hey, we want these payments. We want these payments. We're about to foreclose on you. And there was this note investor that came in, took that note over, and they gave this family a break because they understood what was going on in that time right now. And so they kind of gave them a grace period, minimized the payments. And then when things started to get better, that's when they started to pick it back up and make those payments, but now to this note investor. So I just love that aspect of it, of the humanity aspect that sometimes we neglect when it comes to the money world. But I want to ask you too, like a lot of people within our community, within like the private money club, doing some lending, a question
Mhm.
I get a lot is, well, hey, what is the minimum to start with this? If I have like a smaller budget or a smaller lump of capital, is this even possible for me? So in your ranges, what is like on the minimum side that you're seeing these notes going for?
Yeah, notes are in all sizes. Uh, it can be from one to $5,000 on the loan balance, going all the way up to over 1 million when we get into jumbo loan territory and everything in between. So there are at all levels. But I'll tell you something, Hannah. This is a lesson I learned early on as a note investor, because I've certainly purchased some loans with low balance, like 5, 6,000. I've bought a few of those. But what I quickly learned was that it takes the same amount of effort, work, and expense to have a $5,000 balance note as it does for a $50,000 note or a $500,000 note. And so the return on your investment and your time and everything, it's drastically impacted. And so I quickly learned to stay away from those smaller notes. However, granted, we buy in pools, right? We're buying loans in batches, and so sometimes some of those smaller ones will be mixed in there. But what happens is the expenses and the work, it does erode into your return. And so they're not as good. And this is the reason why, for instance, if you're an investor, maybe a real estate investor, maybe you've run into this where banks won't even originate a loan unless it's over $100,000.
Yeah. Yeah.
If you're working on a low value property that's less than that, you're going to have trouble even finding a lender that's willing to write a loan. And this is the reason why, because it's the same amount of work and effort and expense and overhead, and it's just not worth it for them.
I get you. I
Yeah.
know.
So as far as your question, how much do you need to start with? It's all across the board. You can start real small or um, move up as your capital allows for it.
Yeah. And now let me ask you this. So what are the types of returns an investor can expect with a mortgage note? Well, and kind of what are some of the realistic timeframes too?
Yeah, returns really vary. Like anything else, how much risk are you comfortable with? That's the question. And so if and I'll give you some ranges. Let's say you wanted to invest in a super safe note, that's clean, that has a perfect payment history on it, and the property is pristine and well maintained. Borrower has excellent credit, stable lifestyle. Well, you're going to expect to earn like around 6%. or so. And then if you're willing to take on more risk, maybe uh, a different equity position on the property or different risk profile with the borrower, now you're going to see the pricing change and your rates of return going up and up. If you want to invest in hard money loans, which are popular for real estate investors, you're getting into double digit returns there, right? There's more risk with those because they're business purpose loans, but as you get more comfortable, more experienced, maybe you're in a better position to take on some additional risk. And so that's the natural evolution of an investor with any asset, right? As we learn and get more experience, we're more comfortable taking on complexities and problems and being able to handle those. And then you can earn a higher rate of return.
That's right. That's right. And what I hear from that is that you got to hop in the pool in order to learn how to swim. I say that a
Yeah.
lot.
Start with the basics, right? Start with maybe investing in a note fund that's managed for you, or buy notes that have, they're safe. There's a good equity position and a good track record on them. And start with that and get yourself set up, get yourself some experience. And then over time, you can grow and expand.
Yeah, yeah. And how does one go about finding and purchasing the mortgage notes? Like what online platforms are can they look into or marketplaces?
Yeah, I'll tell you, those exist. However, the majority of note investment transactions are all done through personal relationships.
Okay.
And so you need to get good at building relationships, meeting note sellers and other investors, meeting note funds that buy and sell notes as part of their business. uh, you can attend industry conferences and events like the one that you mentioned earlier, Noteworthy. If you go to Noteworthy or any other note conference, guess who's going to be there? You're going to be in a huge room full of note investors, and there's going to be some that have notes to sell and note funds that at the end of the year they're wrapping up their portfolio. They're going to put notes out to sell. So this is how you build those relationships and get to know people, and then from there you're going to be having opportunities come to you to purchase notes. And
Yeah.
so it's a process. You have to plant seeds, get good at networking and building relationships, and then from there, opportunities can open up for you.
Yep, yep. It's just like this past weekend, I was at a real estate event. We are teaching on stage, and I have this one property in Daytona Beach. It's still on the market, and
Hmm.
I kept asking everybody, "Hey, you know anybody? You know anybody who wants this property in Daytona?" And so I think that would be my biggest advice: to just look. But then also ask. It's okay to ask and see where these folks are hanging out with at and
Yeah.
the questions that they have. And Fred, because here's one of my things that I'm still learning about more and more is, when I'm looking at these notes and they do come across to me, because sometimes I'll get some emails from y'all, you guys will send me some stuff. And how do I assess the quality of that note and the risk level?
Yeah, this is a great question. And I cover this in my book, how to do that analysis and that due diligence. There's a few main areas we'll talk about. First of all is the track record and payment history on the note, right? Has there been years and years of all payments on time every month? Or is there a pattern of late payments and then getting caught up again, and then later on more late payments and getting caught up again? And so you can look at that. You look in the servicing records on the note. Going beyond that, of course, you're going to look at the property, the equity position, the value of the property. What's the real estate market look like locally where that's located, and see what that's like. And also you look at the profile of the borrower themselves, credit record, credit history, employment history, all of those things. Do they have a stable lifestyle? Um, that tells you a lot. And then going beyond that, you certainly want to look at the note seller. Are you dealing with a reputable person? And also the loan servicing. How is the loan being serviced? Is it serviced by a professional servicing company? Which, by the way, I always recommend board your loans with a professional servicing company. What they do is they manage the note on behalf of the lender, the same way a property manager manages a rental property for the owner. The servicing company manages the note on behalf of the lender, and they take care a lot of the day-to-day hands-on administrative duties of keeping track of the payments, collecting payments from the borrower,
Mm.
keeping track of the amortization schedule. And so it's important to look at all of that.
Yeah, yeah. And now, let me ask you this, have you ever found yourself in a position where the borrower defaults?
So defaults do happen. It's something that comes up from time to time. And really, what's important here is your servicing company. They're the ones that step in and get really hands-on, um, getting in touch with the borrower, proposing solutions, proposing maybe a loan modification if that's appropriate, offering flexibility. Because for the lender, they just want to get the problem resolved.
Yeah.
That's their goal. Get the problem resolved, help the homeowner to get back on track again. And whatever that looks like, it has to be analyzed on a case by case basis. But the servicing company always does those activities with an eye towards compliance, all the rules and regulations that have to be followed, and they are your agent, your advocate. And so, if you tell them the goal is you want to get this default resolved, they're going to work towards that end. And so that's one of the most important duties of servicing companies to handle those scenarios when they come up.
Yeah, which is kind of important too, because okay, so let me ask you this then. Like right now, for instance, I'm looking for a property management company,
Mhm.
and their fees is that they're going to charge me 10% per month of the monthly rent of that tenant. Is it somewhere similar? Is that how these servicing companies are taking their fees? It's a percentage of the payment?
Servicing companies typically charge I think it's very reasonable cost. They charge on average, between $15 to $30 a month per note.
Got you. Okay.
The size of the note, not relevant. This goes back to the same expense for a $5,000 note as it is
Yep.
for a $50,000 note, right? This comes into play here. And so think about that, $15 to $30 a month for all of the heavy lifting they do. Very reasonable.
I agree.
Very reasonable. And they handle all the compliance stuff. They handle all the IRS forms that have to go out at the end of the year for the taxes, all that stuff. And so for anyone that starts to grow a portfolio, you may think, yeah, maybe I can self-service a couple of loans, but what if you have 10 or 20 or 30 loans? It becomes unmanageable at that point. And so, yeah, it's a valuable service, and I would say it's one of the most important vendors that you're going to have working with you in your note business.
Yep, yep. And two, this is for my folks, I know some of y'all have like those old 401ks. You just transition them into the self-directed IRAs, and you're thinking about, okay, I got this money that's kind of being lazy here, because as we know, money is made in the motion of it. How do I go and take these dollars and go and put it towards things that will create me more cash flow? And this is one of them, y'all. If you
Yeah,
have that self-directed IRA account, and I don't know, Fred, you may know more. Can Roth IRAs or Roth 401ks, can that even be used in this?
absolutely. all of those types of self-directed accounts, even HSAs, right?
Interesting.
I have an HSA. I own notes in mine.
Right.
And a lot of people just don't know you can do that. But from speaking with many of the leading self-directed IRA custodians, you can always ask them, "Hey, what's the most popular investment that your account holders like to hold?" And notes is at the top of the list every time. And
Interesting.
so yeah, it's a really powerful strategy because uh, you get those tax benefits from the retirement accounts, and that's powerful.
Okay.
Because I'll tell you what, Hannah, investing in notes, it generates a lot of tax liability. You don't have deductions, you don't have depreciation like you do with real estate, and so it generates a lot of tax liability. And then if you can do that in a Roth IRA or Roth 401k account where all of your growth is tax free, this powerful, very powerful.
Yeah. Yeah. And now for my like newbie beginners, what are some of the common mistakes that beginners will make when they're getting into this whole mortgage notes investing world, and how can they be avoided?
Yeah, I would say get some guidance, get education and mentorship, have help. If you're evaluating a loan file, a note, mortgage, the assignments, all the documents that come in when you buy a loan, and you don't know what you're looking at, get some help. Get some help. I would say it would be a very worthwhile investment of your money to hire an attorney to help you review all the loan documents, make sure is everything right. You pay them for an hour of their time. They'll be able to review the whole file
Mhm.
and tell you, hey, here's some potential risks, or they may say, hey, this is, a lot of problems. You may not want to go with this one, but they're going to keep in the forefront protecting you and protecting your capital. Whether you're buying an existing note or you're originating a note, you want to do some private lending. Absolutely, have an attorney help you. And if you pay them for an hour or two of their time, their hourly rate, yeah, it's expensive. But what if that protects your 50,000, your $100,000 of capital?
Mhm.
It's money well spent.
Yeah.
And so always get help, especially if you're doing things for the first time. Mentorship is huge. Joining a community, getting involved in a community of other investors as well, because you may say, "Hey, I'm looking for an attorney in Tennessee because I'm buying a note that's in Tennessee, and there you are in Florida, right? You don't know anyone there. Your Florida attorney shouldn't be looking at a Tennessee note. You need someone licensed in the state where the property is located. And so if you're in a community, you can ask for referrals from people, other investors. Someone is going to, when you go in that room of investors, someone there is going to know someone and make an introduction. And that's so valuable.
Yeah. And now, what are the rooms that you're hanging out in? What are whether it be Facebook group or live events or virtual webinars? How can people get involved with it?
Yeah, there's a lot of great ones that are out there, and I would say find note events to attend. Right, you mentioned Noteworthy earlier that you're speaking at. They do a good job. There's Paper Source that's held in Las Vegas every year. There's diversified more note expo, mortgage expo every year. So there's a lot of great events that you can look at. Certainly, if anyone wants to reach out to me, I'm happy to share some more recommendations in detail. But things change all the time, and also don't forget your local real estate groups,
Yes.
because what I found is in decent real estate investor group, there's always a couple of node investors, out of the 500,000 members, there's always a handful of node investors in the room. So they're there. You just got to find them, ask, and you can certainly meet folks.
Yeah. Hey, and Fred, I guess last question then for you is, hey, you've been in this and you've been gaining your experience and your expertise over these years. And how have you been scaling up your note business? Or are you finding yourself buying more and more now because you're getting comfortable with it? You know how this stuff operates. What has been your experience as leveling up in this arena?
Yeah, this is something that I would say every investor goes through, right? You start out with buying maybe one-off notes where you're buying one or two at a time, but then eventually you start buying pools of notes, 5 notes, 10 notes, 20 in a package. And when you do that, you're able to get better pricing because you're buying in bulk volume, and the relationships grow. You
Mhm.
start to get around people that are operating at a higher level of business than you are. And that's powerful. That's powerful. So I always seek um, to be in proximity with others that are successful at the thing that I want to get successful at.
And a lot smarter than myself. I knew I was in the right room because about a week ago, somebody asked me, Hannah, do you know anybody who can buy my whole portfolio? It's priced at $250 million. I said, no, I don't know anybody right now, but I bet I can go find somebody.
Yeah.
And that's how
Either you, yeah, either you know someone or someone you knows someone,
that's
and
it.
you're able to facilitate that introduction.
And it's all about relationships, no matter what line of business that you're in, no matter if it is your
Yeah.
money world or your personal world, your health world, it is all about the relationships that you cultivate. So, is there something that I did not ask you that you want to leave with the listeners?
Thank you. What I'll leave the listeners with is this thought. You know, I want to tell you that a lot of people have been focused on all of these different things. We're through an election cycle and just so much noise in the media. And I'll tell you what, if you focus instead of focusing on the things you can't control, right? You can't control the president, you can't control the government, you can't control the economy, but you can control your own personal economy and
Yes.
how you manage your investments, how you manage your cash flow, and your business and what you focus on. And so these are things, put energy into what you can focus on and control and how you respond, because that's all within your immediate control. And you're going to be a lot better for it. You're going to be able to shift and adapt through the changes that come in life and in business as well. Persevere through hard times and grow and expand.
Yep. No, and I 100% agree. And y'all, this is what we're going to be talking about down in Tampa, Florida, March 1st and 2nd. Go to moneygamelive.com, and it's everything just talking about mastering the money game.
Hmm.
So I want to see y'all there. Also, go to Amazon, purchase that book, The Little Green Book of Note Investing. Did I get that right?
You got it. Yeah, you got it. And one more thing, I want to invite all your listeners, anyone wants to connect with me, learn more, if you have questions or learn more about node investing, you can connect with me by going to my website, which is fredmoskowitz.com. And if you prefer a little easier spelling, you can go to giftfromfred.com. I'll have a special report on note investing I'm happy to send to you, or you can send a message and connect with me there. I always love speaking with investors because we all do so many different things, so much diversity in the investment space. And it's wonderful.
And we
And
keep
so,
learning from
yeah,
each other.
yeah,
Um,
thank you.
Thank you. No, thanks for joining us. And hey, I'm going to be putting all of those notes down in the show notes in the description down below. And reach out to Fred. Just see what's going on in the community, how he can help you. I'm telling you, I know a lot of people who they love this space. And that's why for 2025 and my goals, this is something that I want to be getting into personally myself. So thank you, Money Multipliers. Thanks for joining us on another episode. I will be back next week. And until then, happy Thanksgiving, everybody. See y'all.
Thank you.